welcome, folks, to the first revival of the revivals Invoke. Okay, let me stop with the accent. But on a serious note, welcome to the first revival of the revivals Invoke. In this revival, we're going over premium and discount and displacement ranges. Because as you know before, if you watched that video from a year and a half ago, going on 2 years in about a month, you will see in the title that it says premium and discount and displacement ranges. Okay, so we're going to be going over both. But first, you have to learn about premium and discount, obviously. So, what is premium and discount? What is that? Like, what is premium and discount? Premium and discount is basically understanding, not really understanding, but it's a concept that price can either be at a cheap price or it can be at an expensive price. It can be in a discount or it can be a premium. Okay, discount evidently means cheap. Premium means expensive. Okay, so basically what this means is when price is in a premium, that means it's too high. And then when price is in a discount, that means it's too low or it's too cheap. Okay. Now, how do you find that? Like, how do you know when price is in a discount or is in a premium or is expensive or is cheap? How do you find that? Well, you draw something that are called dealing ranges. Okay. And I'm going to teach you what that dealing range is in the anatomy of it just in about 2 seconds. Okay. So whenever you're drawing a dealing range, it's going to look something like this. Okay. I'm going to teach you how to draw it in a second. Don't worry about that yet. But I have to teach you what it is and how to actually read it. Okay. So you have three things you need to worry about. You have premium. Well, I got to make this green. You have premium, and then you have discount. Okay. Now, do you see that little line in the middle? I just blocked it off with the boxes, but if I pull it down just a little bit and pull this up just a little bit, you can see that line in the middle. That line in the middle, right? So which is the half point of whatever you draw it from. So if this is a high and this is a low, that midpoint is the half of that entire range that you've drawn. So for example, if we drew a range and this is the range here, okay, that midpoint is called the equilibrium. Okay, this is how you're gonna find the premium and discount ranges. Okay, anything above equilibrium is premium, obviously, right? It's expensive prices. Anything below equilibrium is what? Is discounted prices. It's cheap. The market is at a low point right now. If it's in a discount, it's in a low point. If price is in a premium, it's at a high point right now. Premium equals expensive. Discount equals cheap. Very simple, right? Very simple. Nothing hard. I don't have to explain too hard, do I? Nope. It's that simple. But typically, if you're in a premium, you want to look for sells. If you're in a discount, you want to look for buys. Okay. So what price is going to do is if it's in a premium, we want to see it go down. If it's in a discount, we want to see it go up. If it's in a premium, we want to see it go back down. But JJ, if it keeps going up and down, 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 won't we just be going sideways for forever? No, not necessarily. Because as you know already, there's things that are called liquidity. Okay. And the top and bottom of these dealing ranges are, I guess you could say, very sensitive points of liquidity. There's a lot of liquidity resting at at the top and bottom of these dealing ranges. I had a little stutter there, but at the top and bottom of these dealing ranges, there's the low and high that you draw it from. There's going to be a lot of liquidity right there because that's what actually draws a dealing range. So eventually, whenever price is ready and price is really showing that it wants to, seek the liquidity outside the dealing range, it'll tell you. It'll tell you through its confluences and how it's acting and how you actually look at the chart. And you're like, oh, okay, price wants to go higher. Price wants to go to this low. Price wants to go to this high. And then once it breaks out of this dealing range, right, what it'll do is it'll create another one. I know that sounds crazy, but I'm going to show you that in the charts in just a second. But when it breaks out of a dealing range, or when it finally, wants to seek out liquidity, this is called external range liquidity. If you watch the external range liquidity video back, I think last year, something like that, early last year, I think I made that video. But external range liquidity would be the top of the dealing range or the bottom of the dealing range, which is external range liquidity. Anything within a dealing range is internal range liquidity. I just had to say that real quick. But whenever price exits the dealing range and purges the liquidity, the buy side liquidity or sell side liquidity of the dealing range, it'll create another one. Give me a second. I'm going to show you that in just a second. Okay, we're going to delete this so it won't blow up my computer. Now we're going to go down here into the charts. Okay. So in order for you to find a dealing range and to actually draw one, you have to do two things. you have to look for buy side and sell side liquidity to be taken. Okay, because for example, if we don't look for that, right, we can just say from this high here to this low, oh, that's dealing range. I mean, I guess you could say it was, but no, it wasn't. In reality, what did it do? It only took out sell side liquidity. So we want to look for price to take out buy side and sell side. Okay, and from that point that it purges buy side and sell side, the lowest low and the highest high in between those 2 points, you draw your range, and that's how you get it. So, for example, we're gonna there's a dealing range right here, but we're gonna go through it together. So what price does is it comes up to this high. I need to zoom up on that so you can see it, but it comes up into this high right there. See that? It purges this high, creating a what? A liquidity purge. Yep, it creates a liquidity purge. You understand? It creates a liquidity purge. Okay? But on the buy side, by the way, this is buy side liquidity. So it takes out buy side liquidity. Then after it takes out buy side liquidity, or after it purges buy side liquidity, it heads lower. Okay? But it heads lower into what? What does it head lower into? Sell side liquidity. Do you see that? You see that this is even this right here. This is already a dealing range here, because from this high to this low, because from those 2 points, it takes out buy side up here, and then it takes out sell side down here. So this is a dealing range. You can expect price to, trade within his dealing range, but it doesn't. Okay, there's a lot of reasons why, but I'm not going to go into that. It just uses fair value gap to go lower to continuously expand the dealing range. But if you want to say this is a dealing range, yes, you can truly say. And if you showed me this, right? If you're in my Discord and you showed me a picture like this is a dealing range, I would say yes, because it took out buy side and sell side, creating another dealing range. It's very simple, isn't it? Very simple. Nothing hard, nothing crazy. Real simple. Okay. So from that high here, and then after we purge the high, we drop into this low. Okay. So after this, right, we want to look for the lowest low after this point has been purged, and it even went a little further and took out this low and this low down here. So it went pretty. Why? What is that down there? But it went pretty far. I just deleted like something that was sitting right here, and there's something else here apparently. Delete that also. But it came into 1, 2, 3, 4 points of sell side liquidity, and this is the lowest low that it creates before it begins going back higher. So from this high here, okay, if I can come down here real quick, from that high to this low, this would be your dealing range. We're going to go over this multiple times just so you understand it, but this is your dealing range, okay? Up here is a premium, down here's a discount, okay? Now, for example, let's say if we wanted to see price go lower, okay? But before we do that, what does price have to do? What must it do? It has to come to a premium, okay? Sometimes it won't always come to a premium. What I mean by that is it won't always like dig deep into a premium, like it won't go super high. But what it'll do is it'll just touch the equilibrium and then go lower. And that's something that we had here. Price came up to equilibrium and dropped down just a little bit. But in this case, on the entire, this entire expectation of price going lower, price dug pretty high into a premium, and then it said, okay, here we go, we're jumping again. We crashed. Absolutely crashed. I don't know how big of a move this was, but yeah, it's pretty big. Almost 100,000 points. Okay, if you want to refer like that, but this would be about 1,000 pips, which is kind of wild for a move like this. I mean, it's 800 to 800, so pretty big move. But as you can see here, price came up to a premium, or if we want to drag this out so you can see it better, there we go. It's a little better for you to see. But price came up to a premium and then sold back off into a discount. Okay, now let's say we want to see price go higher. What does price do? Now, looking at this entire thing, it comes up to a premium, right? Remember, we want to see price go higher overall. So we're like, okay, we have to wait for price to come to a premium to sell off into a discount. And then once we're in that discount, from there, we're going to go higher, correct? It sells off into the discount. Pay attention. Look at this real quick. After we hit that discount, we go higher. Whoa, absolutely insane, isn't it? It's truly crazy. It's magical, isn't it? Absolutely magical. It is amazing. Okay, like I said, if price takes out buy side and sell side liquidity, you can narrow down your dealing range to that dealing range. So, for example, this dealing range, eventually price is going to like trade in a smaller range. It's not going to be whiplashing back and forth like this. It's not going to. So if you see another range get created, and what I mean by that is if you see buy side and sell side get purged within a singular move like this, you can narrow down your dealing range onto that range. So you won't have such a large range to where it price isn't really like reacting to it anymore. So here's your current range. We can drag this out. Is there like a... No, there is no shift. Shift does not affect the fib, but it affects everything else. All right, there we go. So now we have this dealing range here. Okay. For example, let's say we want to see price go higher. Like we want to see, what I mean by higher is we want to see it break this range. We want to see it purge this buy side liquidity point that's up here, okay? This is external range liquidity. So this is the buy side liquidity of this dealing range, okay? We want to see price go up there. So this is the range. After the range is created, price begins to head higher, okay? Now, after we head higher, we already take out this high. We already take it out. But pay attention. Are you paying attention here? Price comes up, hits a discount to go higher. Okay, it delivers, it goes higher, but it hits a discount again, and it can do that. It can hit a discount multiple times, and it'll do this in a short term and in sort of a long term. Like it'll take its time. Like it'll dig deep into a discount. It'll do some things first. It'll consolidate. It'll go up and down while being in a discount before going up to this high. But in this case, it did it in a very short term, short manner. Okay, it didn't waste any time, but it came down into a discount, went higher, then did it once again. Like I said, it doesn't have to dig deep into a discount. It can just touch the equilibrium or go below the equilibrium just a little bit. And it did just that. We came down below equilibrium. Then we rallied higher. We rallied, consolidated a little bit, but we're still edging higher. And then boom, we finally smacked that high right there. Pretty cool, isn't it? Very cool. It's very cool. I promise you. Once you start drawing these ranges, you start getting into it, it's truly amazing. Truly amazing. It's amazing. Seriously. But since we see price take out buy side and sell side over here, we can narrow down our range to this high and to this low. Crazy, isn't it? It's truly insane. Now watch this. Pay attention to this, right? So once the dealing range is created, price heads back up. Okay. Now let's draw this out so we can really see that equilibrium point. There we go. Now we can really see it. Okay. So what price does is after the dealing range is created, it heads back up to, successfully or activate the range. It activates it, right? Then let's say we want to see price go higher. I mean, obviously we can already see that price heads higher after this, but let's see why. What price does is we come back down into a discount. We rally again, but what are we exactly doing here? We're not displacing. Pay attention to these highs here being accumulated. 1, 2, 3. We're accumulating liquidity before we go higher. So 1, liquidity point. Consolidate. Boom. Dig into a deep discount. After that, we're like, okay, we're ready to go. Okay, sometimes when it comes into a discount, it's not going to displace immediately. You have to understand that. You can expect it to do so, but even if, for example, even if you expected it to do so right here, you can see that it didn't go up to this high that we're expecting it to go to. Okay, it didn't go to that. So we have 1 high, 2 high, 3 high. It's accumulating liquidity before really displacing away from here, before really getting out of here. So 1 touch into the discount. Okay, it doesn't really deliver, but we're still accumulating. Boom. We have this is just this Jason Love handle instantly teleporting down into a discount. Okay. Then we see the willingness to go higher. Price comes higher, creates a break of structure, and then it comes out and takes this low also. So then it just shoots higher like this. Shoots higher, shoots higher, shoots higher, shoots higher. Does it go any higher than this? Nope. That was that recent dump. I think on Friday. Yeah, it goes up into the recent dump. But that's premium and discount. Okay, it's just understanding that price can either be cheap or it can either be expensive, and you figure that out by drawing the dealing ranges, which I've already taught you how, and I've showed you how you can implement them with an actual price action. We're doing it in hindsight for obvious reasons, so I can teach you. But I just taught you how to draw a dealing range, how to use it correctly, and how to use other confluences with it. I didn't go too deep into it, but you should understand. I should have taught you well in this revival on what premium and discount really is and how to use it and how to find out where price is in a dealing range. But hope that's enough for this teaching. Enough of me yapping about premium and discount. And I hope you can use this well when it comes to your trading, so it can enhance your skills, make you better, so you can trade easier, see price go up and down a little better. So I can doing anything I can to enhance your learning or to enhance your trading skills. Okay, but that'll be it for this revival. And I'll see you on the next one. Until then, be safe.